Hello everybody, this will be the first Market Stocks Club video on YouTube. This will be over our January 30th meeting. So first of all, what is the stock market? The stock market is a marketplace where investors buy and sell shares of publicly traded companies. It also serves as a critical component for the global economy, enabling companies to raise capital for expansion while providing investors with opportunities to build wealth. Transactions occur through the stock exchange, and prices are influenced by factors such as company performance, economic conditions, and investor sentiment. So let's break this down. What this is basically saying is that when a company wants to go public, they will enter the stock market and they will be able to have many different investors come together and buy portions of their company, which is known as stocks. And then this enables them to expand on capital. Spending on capital basically means they're able to fund and get more money for whatever they may want to do. And prices are influenced. This basically means, so a real world example would be NVIDIA dropping an astronomical amount in valuation after the introduction of DeepSeek AI, which would reflect how investor sentiment can affect the stock market. Now, how do stocks work? So basically, as I just previously mentioned, once a company goes public, different investors from all over the world can buy a portion of the company. These people are called shareholders, and they own small parts of that company. So, as a shareholder, you can benefit if the company grows and becomes more valuable, which also increases the stock value. Companies may also pay dividends to shareholders as a portion of their profit. The stock market price is influenced by factors like company performance, market conditions, and investor sentiments. Investors buy and sell stocks on exchanges, aiming to sell at a price higher than they bought. However, stocks can go down as well, leading to potential losses. What's really good about stocks is that you have unrealized gain or unrealized loss, basically meaning that unless you sell that stock, you will not have lost any money or gained any money, which is a big plus and reason why a lot of people choose the stock market. So then, why should one invest in stocks? Well, first of all, wealth growth. This is very good for retirement accounts and is a very good way to set yourself up in the future. And these most likely will return positively as long as you buy stocks such as index funds, so like the S&P 500 or the Dow Jones. Those are very good ways to secure money and grow your wealth. Usually, these stocks also beat inflation, which helps your money actually retain its value and actually be a little bit more than it was worth, unlike if you were to just put it in a bank. And also, passive income is a portion of this as well. As I mentioned before, companies can also pay dividends. Now, how should you get started? What are our first steps? So first of all, we want to set up goals. These goals could be like, with this $1,000 of capital that you initially have, make that into $1,500 or maybe even $2,000. Set goals like that for yourself so you can make sure that you have a direction you want to go. And then, of course, you need to choose a brokerage site. So Fidelity, Robinhood, Vanguard, all of these places are great places to start and offer very valuable information about the stocks that you're trading. And of course, we never want to go too big on one stock, and we also want to diversify, which means we want stocks from all over the place and never just one sector. And also, always, guys, let's make sure that we're informed. Let's read news articles in order to be caught up on all of the different market trends that are occurring. Well, thank you guys for listening today, and this will be the conclusion of our first video.